Welcome back, guys, and in this video I'm going to compare Bendigo and Ballarat in Victoria. And for those of you who don't know, Bendigo and Ballarat are seriously becoming quite competitive markets, with Bendigo being the much hotter market at this point in time, where suburbs are actively growing in value. Meanwhile, Ballarat is a much more cooler market compared to Bendigo, but is also starting to pick up. And from what I've heard, we have some big buyers agency now in the play buying up stock in this location. So generally speaking, if you want to be in Bendigo or Ballarat, you want to be in there now rather than later. But I am going to break down each suburb for you and compare them so you can decide which location that you should be purchasing in. And like always, I'm going to go through the data for you guys. And we have Ballarat City here. Roughly the median price is around $550,000, but it does have relatively lower yields, around 4%. You do have to make sure that you can manage a cash flow in this area. It does have a population of about 120,000 people with a relatively diverse economy as well. And I will get onto that a bit later. But as you can see, Ballarat is starting to increase in price now, with the 1 quarter change around 1% and the 1 year change around 3%. It is still extremely early days, but we are starting to see the first signs of positive movement in Ballarat, especially in that affordable price range of around 450 to 550k. We can see rents have been slowly rising around 2%, but of course you should be checking at the suburb level as well. I am currently showing you at the local government area level, or the SA3 region. And as we can see, one of the greatest metrics that you can have a look at is the affordability index, which is sitting well below 30 years, which means that it's extremely affordable for local residents in the area. You can see that stock levels have really started to decline over the short term, and demand levels are starting to pick up, which is an extremely good sign to see. You can see that vacancy rate is around 2%. It's a little bit on the higher side. This is something I have noticed throughout regional Victoria, and I expect it to also increase in vacancy as more and more investors are starting to purchase in this location. But really, the supply and demand metrics are starting to look very, very healthy in Ballarat on an LGA level, and in some suburbs they are really starting to pick up, and I will go through some of those locations as well. In similar fashion, we do have Greater Bendigo, but I really would say you need a budget of around $600,000 from this point onwards to be able to purchase here. Now the yield is close to 4.5% depending on the type of property you purchase and the suburb you're purchasing in specifically, but it is also a great location with around 120,000 odd people and with a decent amount of infrastructure spend, and we are starting to see prices really start to accelerate within Bendigo after a long period of stagnation of about 3 years or so. We have also seen rents starting to rise with about 5% over the past year, which is much more healthy than you'd say Ballarat, which only had about 2.5%, and in some locations not much rent rises at all. Great socioeconomics, ersatz score, rented to owner occupier ratio, but those are more focused on suburb specific. I'm more talking about the LGA level at this stage. Affordability is not as affordable as Ballarat, which is sitting around 25 years, but Bendigo is still sitting at a very comfortable of 30 years, which is still extremely affordable for a regional area. And once again, you can see the supply and demand metrics are extremely healthy, with stock levels falling every single month. And if you talk to a couple of agents on the ground, you know that it is already competitive. Days on market is also falling, so that demand is increasing in that area, and it has very good demand metrics. And when we look at vacancy rate, it's also around 2%. It does say that it's falling in Greater Bendigo, but in reality, I would expect that vacancy to start rising ever so soon, with more investors purchasing into the area. Now, building approvals is sitting around 1.28%, or 700 new houses coming in the next 12 to 24 months. In a similar fashion, Ballarat is also sitting around 600 houses, but when we look at building approvals, not only do we look at the LGA level, we also want to look at the suburb level to make sure there's not a lot of houses coming in the suburb itself. But nonetheless, the building approval rate is pretty good as well in that respect. So both locations, from Greater Bendigo to Greater Ballarat, we are seeing the supply and demand metrics falling in the right direction, with demand really starting to pick up and supply really starting to dwindle, which is only going to cause house prices to go in one direction, and that is up. And before I go any further, guys, I have a huge announcement to make, and that is under 450k's property course, the Property Blueprint has permanently dropped its price to $349. Before it was $499, I've made it $349 as a one-time payment. It's extremely valuable, guys, with 8 in-depth modules plus 60 plus videos and hours of content for you guys to go through to understand how to invest into property, from the absolute basics to the absolute knowledge of what top 1% of investors know. There is also 1 month access to the private community, so you will get get a taste of what it's like to be in the community and also apply your knowledge that you've learned from the course. It is an absolute steal, guys, at $349. Now, the next thing I want to compare, guys, is the economy of Greater Bendigo and Ballarat. It's a home of 120,000 people, 55,000 jobs with an economic output of $22 billion. So a huge economy by a regional level standard, right? It's not a small regional location. And we can see that GERP has been increasing over the past couple of years from going 9 billion to 10 to almost $11 billion. And population has been slowly increasing. Nothing amazing, and it's also in the right direction. In a very similar fashion, Ballarat, 120,000 people, 57,000 jobs, also a very close $22 billion economic output, with also its GRP rapidly increasing, so more economic productivity in the area. That is a great sign for a regional economy. And then when you start to look into the industries of Ballarat, we can see that it's diversified, well diversified into healthcare, education, retail trade, construction, manufacturing, and more. So you may wish to look deeper into what those manufacturing exports are, but overall, a very well diversified and large economy that is producing great results for the local people. And quite similarly, look at industries of Bendigo. Bendigo is also diversified into healthcare, retail trade, construction, education, and more. Now, one thing you will notice with Bendigo is that when you look into its regional exports, you can see that it's manufacturing and mining. So a decent chunk of it is actually mining, with 30% going to exports in Bendigo towards mining, and you might also find some downstream service into construction and healthcare and extra from mining, but it is still very, very diversified into manufacturing, construction, and it has a very healthy economy. So it's not just a one-trick pony like a mining town in far north Queensland, for example. It's very well diversified nonetheless. And historically, much like Ballarat, it has performed extremely well over a 30-year period, and I believe it will continue to do so as well. Very similar to Ballarat. Ballarat has gone through a bit of a downtrend back in 2022 after all the growth post-COVID, unlike Bendigo, which held its prices much more strong, hence why you find prices in Ballarat a little bit cheaper. We've gone through the data, we've gone through the economy. Bendigo and Ballarat, both great regional locations, massive population, 120,000 people, each about 2 to 3 hours away from the CBD of Melbourne with transport links, economically diversified, a growing GRP, a decent unemployment rate, and decent levels of supply in terms of new housing. So what do on-the-ground properties look like, and what could you be looking to purchase? Well, I've got some examples for you. In Bendigo, like I said, you're really looking around the $600,000 mark to find a good property in Bendigo at the moment. If you have anything less than that, you might start to struggle, or you will be competing with a lot of other people who are also looking at that very, very affordable range. So in Bendigo, you have properties like this one here, a very nice brick home in Golden Square in an established pocket. Its interior is not the best, but something like this is sold for $610,000. If you're an East Coast investor, $610,000 is quite affordable for you guys, I know. But nonetheless, this is an example of investment in Bendigo. Now, you look at something like similar that 3x1 in Ballarat, you have this one in Sebastopol, which was sold for $530,000, so almost $100,000 less, and also an excellent property with a shed and also a much better interior. Now, in Ballarat, you can find properties all the way from $450,000, which need work, right? You might need to do repairs to the property, but you can get properties around $500K mark in Ballarat. That's a decent brick home these days. Now, by the time I release this video, prices may have picked up, but nonetheless, at this point in time, around $510,000, you can get a good, decent property in Ballarat. But what do the numbers look like? Now, I'm not going to show you the rental properties. You can just double check that yourself. But when you look at the numbers, $610,000, 20% deposit, and vice versa, $529,000 at 20% deposit. When you look at the rental properties, you're getting about 4.3% in Bendigo and around 4% in Ballarat at $400 per week. So overall, you're about negative $500 on the Bendigo property per month and about $550 to $600 per month on the Ballarat property before other expenses, etc. Now, I haven't taken into all the other expenses of water rates, council rates, land tax, etc. This is just surface level information. You guys can do a full property analysis in your own time with the property of your choosing, but this is just an example. Now, the difference in the yield is coming to be very similar now. And the reason is that Bendigo has risen in price over the past 6 to 8 months, which means the yields have started to drop. So you're really getting yields of around 4.5% is what I generally find. And in Ballarat, you're getting around 4%. So when you actually break down the numbers, you're looking at a difference of around $500 to $1,000 per month between the areas. But that is still an impact on your cash flow and your future borrowing capacity. So if you do require the higher yields, then you should be looking at Bendigo. But if you can can accept the lower yields or you have a much lower budget of around 500k, then you need to be looking at Ballarat because your options in Bendigo are extremely limited. So that begs the question, what suburbs should you be considering? Because I've already gone through Bendigo and Ballarat and the differences between them. But which location, which suburbs should you be considering? In Ballarat, I'm just going to list them out for you guys, and you guys can go and do your due diligence on HTAG. I do have a discount code so you can check it out. Awesome. So a location you could be considering in Ballarat is Wendouree over here. You could also be looking at Delacombe down in the south part here. Now, I do want you to focus on the established pockets rather than the new developments area. You want to be focusing on that established areas. You could be looking also at Sebastopol as well as Canadian and as well as Mount Clear, if I can spot it on the map, which is just a bit below Canadian as well. Now, you could be looking at other suburbs. The data doesn't look as good at the point in time, but it is slowly improving as months go by. And that's just some examples in Ballarat which you could be considering. Well, what about Bendigo? Bendigo has a host of suburbs you could be jumping into right now, which is giving you extreme capital growth. And some of these suburbs include California Gully, Long Gully as well, but there's a lot of public housing in this area, so make sure you pick the right pockets to invest into. You could also be looking at Eagle Hawk up here and into Sailors Gully, which is starting to pick up. Some of my favorite suburbs include Kangaroo Flat and Golden Square, which are very, very established pockets. There's great houses. Some of them do fall under a bushfire overlay, but you can make the trade-offs to purchase under them if you'd like to. And then you've also got the newer locations like White Hills and Strathdales, which are the more premium pockets of Bendigo. But a lot of locations across Bendigo are rising in value now. So if you do find the right deal, you want to be snapping it up so you don't miss out. Now, overall, I've gone through the economy, the data, and the locations which you can consider within each of these suburbs. But ultimately, which one should you be considering, Bendigo or Ballarat? And quite honestly, you could go with either location. I'm quite favorable towards Bendigo because it does offer great properties at a great price point, plus decent yields of around 4.5% for the right property. While as Ballarat, there are a lot of properties around that 500k price point and around 550, but the yields are a lot lower, around 4% and just around that 4% mark. Vacancies a little bit higher, and rents aren't rising as fast. So overall, I find that Bendigo's market is a little bit stronger than Ballarat, but Ballarat is a more affordable market for investors to consider. Of course, please align your locations to your investment strategy and your risk tolerances. There are a lot of locations in Victoria to currently consider for investment, but if you do need any help, jump into the private community, and that is where my friends, my investors, and the community itself will be able to help you out. You don't want to miss out. It's $35 a month. Go check it out. Till next time, thank you very much, guys.